first order of business, big order of business here is these fires and what's happening. See, the big question we're getting right now is we have people that are interested in our area, right? There are tri-counties, Amador, Placer, El Dorado. And the concern anyway is the cost of fire insurance and the ability to even get it, or if they do get it, getting canceled. And I know there's a lot of different rules and some things that have changed as well, like this water pressure thing that I was unaware of until most recent. But with all that being said, we have some people that are kind of putting the brakes on, and we just want to help instill some confidence in what you guys know and can share at this point, knowing that it's also new. But clearly, a fire here at 200,000+ acres compared to a 30,000 acre fire amongst high density is completely different, especially high density where it's at. So with that being said, what do you guys what's your kind of thought process or take behind people's ability to continue to get insurance and what the impact might be thus far?
Let's talk about Fair Plan. So Fair Plan currently has 6.5 billion in exposure in that fire. Fair Plan had 700 million in the bank in reserves about a week ago after the fire. So there's a big gap, right? So who pays for the difference between the 700 million and the 6.5 billion? So they have a reinsurance company that has 5.75 billion in coverage. So between the cash on hand and the 5.75 billion in coverage from their reinsurance, that will take care of majority of the claim. However, they still need to keep money in the bank. They have to keep money in reserves in order to be considered actuarially healthy. So they're also now passing an assembly bill that's going to allow them to get an extended line of credit from the California Infrastructure Program. So if they come short, they can pull money from there. The other thing is because they are an association and they're backed by a reinsurance company in California that's admitted, there's going to be some funding from the carriers to be able to shore up the Fair Plan. So ultimately, between the admitted markets, the line of credit, the reinsurance, and the money on hand, they're going to be fine. And the reality is we can't let Fair Plan fold, because if Fair Plan folds, everybody who has a mortgage isn't in compliant, and everybody who wants to buy a house has no option to buy insurance. So that's where the Fair Plan's at right now. The Department of Insurance passed legislation for rate making. Rate making is the way that they figure out how to price and model risk. So for insurance companies, in the past, they were capped at 5.9% on rate increases per year, which didn't keep up with the ability to raise your rates at the rate of what it needed to be in order to cover the risks that the insurance companies were taking on. That's why Fair Plan blew up, and they have 450 billion, half a trillion in exposure in California. So that's not good. We have 40% market share, 50% market share in some areas, and they're supposed to have only 15%. So part of the new legislation on the rate making is going to require or allow insurance companies to first use CAT modeling, which means predictive modeling. So they're going to be able to predict the future in some modeling of some sort and say, hey, this is a high risk area, high fire area. They couldn't do that before. They had to use based on the past. Well, we know in the past, trees were smaller, forests were less dense. There were things that were different in the past that they were using to model what does it look like, what is the risk factor for these areas. Well, things have changed, so they have to use a predictive model. So they're allowing them to use a predictive model. The other part of that is, so I talked about reinsurance. Reinsurance is global. So we have these big companies that say Farmers Insurance has 900 million in the bank. They have, say, in one state, they have $3.5 billion in exposure. The reinsurance covers the difference between what's in the bank and how much the exposure is. So they don't have to carry the cash on hand to cover those claims. They have reinsurance, and this is a global thing. So globally, we have hurricanes, fires, tornadoes, tsunamis, all those things. So reinsurance is designed for catastrophic events to come in and cover the difference between what the insurance company can cover or what their contract says. So say in most cases, it's a $500 million deductible. Anything above 500 million, the reinsurance company kicks in. Because of climate change, we're seeing more fires in different areas. We're seeing weather pattern changes. We're seeing catastrophic events in areas we never did before, and more often and more frequent. So frequency and severity is increasing. So they're raising their reinsurance rates. Well, in California, you couldn't price your products based on what you pay on reinsurance. That had to be a wall there. They couldn't talk about that. They couldn't price on that. So now the Department of Insurance in California is allowing them to use the cost of reinsurance for rate making. They're also putting more of a mandate on an increased amount of coverage for high fire severity areas from the admitted carriers, non-admitted carriers coming in to take over that market share that Fair Plan has. So it's kind of like a 3-prong, 4-prong approach. Short term, there is going to be insurance markets. There's not going to be an issue. Short term, long term, we don't know what rates are going to look like. Are they going to be higher? Possibly. Short term, they're probably going to be higher because we're not going to have as much competition between carriers in the state until more and more come in. But long term, I was at there's 32 fire safe councils in El Dorado County. It's operated by the Fire Safe Council of El Dorado County, and that's also in partnership with OWAPR, which is the Office of Wildfire Resilience. El Dorado County Fire Chiefs Association, SMUD, PG&E, and they had El Dorado Sheriff's Office. They all come together. They talk about what they're doing. But I will tell you, the defensible space, the AB 38 related to the real estate transactions and the home hardening, that's going to be a big impact on the longevity and the affordability of the insurance market. So El Dorado County is one of 7 that are the reduced fire, what do they call it? Reduced fire exposure for California. So they get extra grant money. They're doing a lot in Tahoe here. They also had somebody there today from a company that's actually got a technology that goes into forests that have burned down and it removes everything. And it's very good for the environment. So, I mean, there's a lot that's going on. Like, it's crazy, the whole thing, everything that's happening. But with buyers and people looking into getting the market, I would say short term, there's going to be an option to get Fair Plan or whoever else comes into the market. Prices aren't going to be that friendly, but long term, with all the things they're doing, the goal is to get it back to an affordable marketplace. It could take 2 years, it could take 5 years. It's kind of like interest rates. You date the rate and buy the house, right?
Right.
So
as long as they can afford it on a monthly basis, then we're okay.
Yeah, rates will come down. Mortgage rates will come down. Insurance rates, it has to stabilize. It's not good for the economy. It's not good for people that have lived here for 50 years that can't afford their house because now it's taken all their Social Security income to pay those premiums, and we see it all the time.
Yeah.
So that's kind of in a nutshell what's going on in the market with insurance.
But point is that there's a lot of things that do happen on the backside, and there's, like councils like this that are put together that anybody can be a part of and go and listen in on, but they're not aware of it. With that being said, it's also good to know that there is some hope that the insurance cost will drop. It's just a matter of time. And it sounds like this reinsurance is a form of gap. Is that kind of a way to put it?
Yeah, it's more of an excess. So, like, let's say Cameron Park burns down tomorrow, not that it will, knock on wood. But let's say, let's say Farmers experiences, $790 million in loss. The reinsurance would come in after the deductibles met by Farmers if it's a catastrophic event. So let's say that event's almost $1 billion. Farmers has a $250 million deductible. Once they hit that deductible, then reinsurance pays the balance. Their other thing they're doing in California is they're trying to omit anything that's not related to California losses in the reinsurance program. So reinsurance goes up if we have a hurricane in Texas. They're trying to get it so it's an isolated event by state, so that if a state has issues, then that state is impacted by their issues versus global impact, right? Right now, that's the whole thing with reinsurance. They're the ones that have to figure that one out.
And who's a regulatory agency with that? Is that federally based, or is that?
There's really no regulatory body except for the local state at the state level, because the state level can get involved with how reinsurance operates in their state, but they don't really have a regulatory body. Most of them are in Zurich, Switzerland. So they're companies you never even heard of. I don't even think America has a reinsurance company.
So what would you guys recommend a consumer do, not just because of these fires, but just traditionally with regards to insurance out of the gate that we probably already recommend, but what would you recommend that they do just to be aware of steps to take, things to pay attention to, et cetera, when getting quotes and understanding the policy proposals?
So there are some non-admitted carriers that will write without having to write the FAIR Plan. Be very careful with non-admitted carriers. They are not regulated in California. There's about half a dozen claims a friend of mine has open right now, and he's not getting favorable responses. And Department of Insurance won't get involved. So stick with an admitted carrier, which is a company that is admitted to do business in California. They're part of the California Association, which is tied to FAIR Plan. FAIR Plan is probably financially stronger than any other company, just because between the reinsurance, the line of credit they're getting, and the financial backing of the carriers in California admitted to do business. We don't want to have another Merced Mutual that went bankrupt and everybody got $500,000 max. You don't want a non-admitted carrier that doesn't have to pay your claim. I've seen a non-admitted pay $20,000 on a $100,000 claim and shut the claim and move on. And clients are still fighting that, because they're not getting, and they have nowhere to go. They can't go to the Department of Insurance and say, hey, they're not complying with the law. Department of Insurance is like, well,
Right.
they're not part of our association. They're part of us. They're licensed to do business, but we don't regulate them.
Yeah. And what's 20 to $50,000 going to do on a claim that's going to cost millions or, hundreds of
Right.
thousands to replace? So
Yeah. A bad
yeah.
day turns into a bad life, right?
Yeah, pretty quick. One of the benefits that I've always appreciated is just, promptness when something does happen, being able to provide additional information outside of just insurance. Like, okay, here's your quote, and here's your differences in coverages, et cetera, and move on. But not only be there for that, but just promptness in terms of getting checks cut if something did happen. And like even with our Caldor fire and King fire and stuff like that, you guys can probably attest to a handful of people just stopping by the offices to get, immediate checks just to get out and buy clothes and find a place to sleep and whatever, right? And compared to not just not admitted carriers, but other carriers that aren't of the same caliber, they're not going to get that same service.
And the Caldor fire, I mean, I was a district manager then, and we actually moved the farmers claims team to his parking lot on Placerville Drive. And people coming out of Grizzly Flats with their home burned down and just clothes on their back, our claims adjusters were writing checks for hundreds of thousands of
Right.
dollars as they were walking up. So it is, I mean, at the fire now, we have our cat bus. You can connect up to 300 laptops and Wi-Fi. It has a washer and dryer. It has, we feed people, whether you're a farmer's client or not. We feed people, we show up, our boots on the ground. And same with your clients, like having a 1-800, call center for buying insurance. I mean, half the time you're just trying to get through the phones just like everybody else versus a local agent. You can walk into their office and say, hey, I need help. And we can start the process. And we have numbers that they don't have. We have people and contacts and emails that they don't have. So we can, if we know there's a problem, we can get involved. And so having somebody that's local to be able to walk into an office and say, help me during their worst times, that's
Yeah.
what it's about.
Yeah, 100%. And I appreciate it. If you can each, take a minute to share a little bit about yourselves, what you do, and whoever wants to start can start.
And why you do it. Tell them why you do it.
And why you do it. And
Why
how
are you
much
passionate about insurance?
yeah, on a scale of 1 to 10, tell me how much you love Ryan. No, don't you can tell me that offline.
I'll start. I'm Chelsea. I have worked here for almost 2 years now, I think. I have a background in sales, and I don't know, I just generally like helping people. I am religious, so that's, the main reason why I do things is I just, I go by a plan that's presented to me. So that's the main reason that I do it. And I do love working here. So yeah. And then I help mainly with new home purchases, but we've also been starting to do auto. Auto's been a lot better now. So you'll probably see us presenting auto quotes to clients too, to see if we can help save them some money there. And then umbrellas. So personal lines expert here.
Cool. And multi-policy discounts are something that you guys obviously help push, right?
Yes, I would say
Yeah.
we're for a while there, farmers had the rate increase before everybody else. So it kind of just didn't make sense for a little bit there, but now it's kind of evened out. So we're starting to be a little bit more competitive with our auto again, which is nice.
Cool. Awesome. Thank you, Chelsea.
And I work alongside Chelsea at the same capacity. So we kind of have the same job here. I've been doing this for 7 years now, and home is definitely my specialty. So yeah, just getting the home quotes and the policies issued. And then also I help out a little bit on the back end with servicing and billing and taking payments where needed.
Which billing is fun, right? Especially when people call and like, I don't understand what happened. My monthly payment's not going through or whatever.
I know my favorite's helping old people through DocuSign, learning that. It takes like 45 minutes at least each time.
No doubt. It's always, trust me, I know you're not alone. You're not alone. Cool. Thank you, Leilani.
Yes, no problem.
Yeah, Josh, I've been in the industry about 30 years this June. Got licensed back in 96. I've been a life guy my whole life. And I think our faith brought me and Ryan together. It was kind of a divine intervention in how we became friends and colleagues. And this, brought me on board to handle some of the financial services aspect that Farmers does. That role's transitioned quite a bit. Doing mostly now some service work for him because we're shorthanded, but also just want to give a shout out to the two gals that you've got here on your screen. I've never seen the type of workload that they're able to handle and yet, still have a smile on their face and present them in such a fashionable way that clients adore them. The real estate partners love working with them. Ryan's got a great business going on here. And I think collectively as a group, we all share that passion and one of the main reasons why I was attracted to this agency.
Awesome, man. I appreciate the testimony and the feedback, and you know what experiences I've had with the two of these girls is been similar to what you just explained. So thank you for sharing and reiterating that, because it's also true. And I know Ryan well enough to know that he's probably demanding and pushy, and but he comes with nothing but love, but he knows and cares about his business, which you guys get. So with that, you know, he's going to hire good people that also care about people. And he knows me well enough to know that's how I work. And at the end of the day, you know, more often than not, people work with people first before anything else. Sometimes with insurance, people have a tendency to shop based on price. What is your what would you say if, you know what, guys, I found a cheaper price somewhere else? What is your feedback to that?
A lot of the times we find that people like the coverages are different. The price may be less, but it's usually because the coverage is also less. So just reviewing it. And if our quote is more and they don't need as much coverage, then we can, you know, lower that coverage as well to kind of be in the same ballpark, but only if it meets their needs.
Right. Good answer,
And I've
Chelsea.
seen
Thanks.
in the past as well where people are just getting quotes where they would be insured incorrectly, but they're kind of just doing it because it's cheaper. But the problem with that is you want to be careful because you don't want to be paying for insurance that you ultimately can't use in the situation of a claim if that were to arise. And then a claims adjuster is doing their due diligence and investigating and finding out that there was maybe some truth that wasn't said on the application. And so they kind of look for ways to deny claims. And so any excuse that they can, they might take. So just making sure that people are insured correctly is a big thing so that they would be granted coverage in the event of a claim.
Good stuff.
No.
Good feedback. Dan,
And I'll say, Josh, based on
Yeah.
the losses we've had and, you know, back to my DM role, I've seen 2,000 homes burn down and be paid out. I will tell you with life insurance, there's never enough money. With home insurance, there's never enough money. And with most situations, auto insurance, there's never enough money. So you don't want to save money on insurance. You want to buy the largest amount of insurances you can possibly afford, because when you know crap hits the fan, there's never enough money and you can't go back and try to add coverages to your policy. And based on I have a real estate agent lost a house last year, and she told me, she said she had to come out of pocket $50,000-$60,000, and it was well written. It was based on what the replacement cost estimator said. It's just that labor and lumber and supplies change when you have a catastrophic event. There's supply and demand, right? The more houses that you have to build, the more they're going to charge, because
Yeah.
it's a higher cost. So we found there's never enough money, to be honest with you. So just buy for the inconsequential, or save where the inconsequential is. So basically deductibles, things like that. Take on 5,000, 10,000 in self-insurance, but take that savings and buy more of the catastrophic coverages. Buy more dwelling, buy more personal property, buy more liability on your auto policy, because
Right.
insurance is meant to take care of the insurmountable risk, right? So things that a bad day turns into a bad life because we don't have enough money. It changes everything. So you can't replace
Right.
people. You can't make people walk again. But what I have found is money does help.
Yeah. There are some clients that will just be like, Josh, whatever you suggest, we'll go through with. But I still tell them, make sure you understand the differences in policies, the deductibles. Can you manage the deductible if it made sense? What's the difference in premium compared to the deductible? More often than not, it's better to take the lesser deductible and pay a little bit more. I can lead a horse to water, but I can't make them drink, much like with you guys. If you can't get somebody on the phone to explain the differences in the coverage, at that point it's on them, right? But being able to show the differences in coverages and reiterate like those higher level things real quick, like, hey, the differences in deductible you'll see compared to the, you know, premium, and then the coverages we put here. So when you're comparing your quote, if you are, to others, here's why. You know, 30, 60 seconds, done, out, perfect. But there are others that
I learned that from Josh. Actually, I saw his presentation. He said, actually, I think Miguel sent me the Loom video of Josh's presentation about the 2 to 3 different loan programs, because they were trying to determine how much money to put down. I was like, man, why are we not doing this? Like, that saves so much time on a phone call to reiterate or explain what that information was I sent them. And so I started using it probably 4 years ago because I saw Josh's.
I'm only laughing, brother, because I'm like, okay, here he's stroking my ego, but but no, I think I appreciate that, bro. And, you know, we learn from each other, and ultimately at the end of the day, you guys, you know, I want our business to stay local, much like you do. But as you guys know, like my team is much like you guys, and the ones that you guys you communicate with for the most part are just the front lines people, not the back end people, but like Dawn and stuff. But, you know, she's really diligent about requesting HOIs and stuff like that. So, and knowing when and how, and you guys are great at follow up with that. All right. Well, have a great day. Enjoy the sunshine, and we will, Chelsea, say hi to your parents and your brother. I texted him yesterday, he hasn't written me back. And then Dan, we'll talk to you soon. Leilani, see you. And Ryan, tell your wife I said hi.
I will.
All right.
Thank you for your
Bye.
time.
Thanks, guys. We'll talk to you later.